Okay, welcome everybody to this evening's XAUUSD webinar. My name is Duncan Cooper. Sorry for the slight delay. I'm having a few technical issues this evening. Tonight's webinar, just give you a run through of what's coming up this week, but tonight's webinar is Forex Trade and Live Market Analysis. That will be coming up in a moment. Tomorrow I'll be taking you through the head and shoulder pattern. So if you have the time, 8 p.m. Sydney time tomorrow. And then on Thursday, more live Forex market review, more analysis on Thursday, 8 p.m. Sydney time. Okay, so let's get into tonight's webinar. Before we do, if you can all read through the disclaimer. If you're on our YouTube live stream, I cannot see the chat, but you're more than welcome to watch or join us. I've given you the link there to join us. For those in the webinar room, I've got the chat box open and the question answer box open, so questions can go to either. So you're asking, did the bodge intervene? Well, I don't think they've officially said so, but it kind of looked like it. If I had to have a bet, I would say they did. As soon as we got above 150 last week when the US news came out, as soon as you just hit about 150.10, I think it was, around about that, then everything went down for the empire. So I'm pretty sure they intervened. And I'll be cautious around that 150 level. Moving forward. All right, so let's give you a few more seconds to read through that risk disclaimer. All right, we'll move along now. If you're new to the webinars, my name is Duncan Cooper. I am a senior market strategist and trading mentor here at Audjpy Securities, and I'm a full-time Forex trader now. Been trading for more than 15 years, mentoring for more than 10. And if you want to contact me, my email is there, duncan.cooper@acy.com. Through the week, you can connect with me at our website. Go to acy.com, go to the market news tab, or our YouTube channel, Audjpy Securities Australia, or you can connect with me on Twitter and LinkedIn. The handles are there. I'll put some analysis through there during the course of the week. And at ACY, we have our Telegram channel. If you want to get access to that, contact nathan.bray. I'll give you his email in the chat. His email is there at the bottom, but I'll put it in the chat. If you want to get access to my chartlets and templates, then simply contact Nathan. He'll be able to set you up. If you need a demo account, he can set you up, or if you have questions about a live account, he can answer those for you too. All right, so I'll just put his details in the chat there. So let's get into the news first of all for the week. It's a very high event week this week. Very dangerous week at the moment as we're heading to Wednesday. So these times are Queensland time. So New South Wales time is 1 hour further forward than I'm showing you. If I just want to double check that, I think that's true. I got caught out the other week because for some reason this changed. I just wanted to make doubly sure. All right. So I am doubly sure. So I'm just want to check. All right, it's okay. Let's go with what this calendar is saying at the moment. So getting into Wednesday, that's tomorrow, 10:30 p.m. Queensland time, we have the US core PPI data coming out. Now that's one of the inflationary news events. Expecting PPI to drop to 0.3 from 0.7 month on month. The more important one, I think, for the markets will be the US CPI data, which gives you the year-on-year inflation figure. Is that ticking down? Expecting a move down from 3.7 to 3.6 and month-on-month from 0.6 to 0.3. So that's what the market's factoring in at the moment. We'll have to wait and see what comes around. But in any event, these two news items will be highly volatile. I've seen certainly the CPI data have like a 100 to 150 pip move in one 50-minute candle. So, if you're not in a very profitable position, probably don't want to be in the market when this data gets released. Now, for the UK side, tomorrow 4 p.m. for the pound, we do have GDP month to month. Last month, it had a horrendous figure, minus 0.5. And of course, we had a very strong sell-off last month for the pound, expecting an uptick to 0.2. So market will be looking to that. All right, so those are the big items coming out. Wednesday, Thursday, be very much aware, the market could be correcting back up at the moment. We have been, the market's been pretty short to the US dollar, so we may be seeing a pullback leading into these events because people may be squaring their trades off and not wanting to be in the market when the information comes out. So as well, I've missed it out here, but we've got the FOMC meeting minutes coming out early morning on Thursday as well. So 3 big events for the US: core PPI, PPI. On Wednesday, FOMC meeting minutes early Thursday, 4 a.m. and then 10:30 evening, the CPI data. All right. Now the Fed are saying we should be having interest rates at high levels for long term, and potentially we have another hike to come yet in this year. So I'm sure the market's clearly looking to see what happens with that inflationary data there. All right. So with that in mind, I'm just going to analyze the charts. You can work out as and when you want to trade around those data releases. So first of all, we'll look at the dollar index, which we did have relatively good data on Friday from the job figures, but we finished negative for the week. So it's worth noting, as I was just taking off there because that was something I was doing for somebody else, but we've had a 12-week advance. And in this 12-week advance, which is pretty much 3 months, we've actually put in the low of the year, a fresh low for the year, and then up to a fresh high for the year. In between, we had a week where we had half a week down, well, we just had a week down and traded up and finished positive for the week. So we are negative for this week, and we are trading down this week. Now, the question will be, how much of a pullback are we going to have after 12 weeks? We could simply hold it 105.87, depending on the data this week, or we could be moving down to 104.66. So, just watching the position of the dollar index. At the moment, 2-day charts, it hasn't changed the daily trend. We still have a higher bottom here just. So are we able, today hold at 105.87 and show a positive day by the end of the day? Will that be support then for a further move up? So understand the position of the dollar index and how that's reacting is going to help you then trading a currency pair. So, are we getting support at 105.87 through the week? Or are we coming down to the next level, which is at 104.66? All right, now the S&P 500 is having a rally with that dollar moving down. And last week, I was looking at the weekly chart. Let me just move this larger fib range off. So potentially we've had a 79% failure from the larger fib range, but we've had a move down, rally, move down. And I'm suggesting that we were at the bottom of the move and I was positioning a fib from the lower top to this potential bottom coming in here, looking for this to rally back up, potentially to put in a lower top, the next lower top for the next decline. So long term, I'm anticipating we may be failing at the 79% level of this large range. And then we're down, rally down. So at the moment now, I'm just looking for, in general terms, whilst that US dollar is pulling back, and if I can get my new drawing tool to work, we draw, move down. I'm anticipating we're going to move up to the 62 to 79% level. There's a bit of a day chart resistance area there at the 79 level, at 44.67, and then we could see the next leg down. So a rally and then the next leg down. That's what I'm anticipating. All right, so today chart, we're going to see this move into an uptrend in the short term. So if you're wanting to position yourself with what could be a long-term move down on the S&P 500, this is really the area to watch failure up here between the 62 and the 79 level, and a daily resistance area over here at 44.60. So coming into that area, we could get a rally up to that area this week. I would be watching up there. You know, if you're wanting to take a long-term position, selling in this area, stop above the high would be the go. In line with that daily the weekly downtrend that we're seeing at the moment. All right. Now the euro dollar, if you go to the weekly chart, we're in rejection mode down here. We've rejected that area twice now. Weekly support 105.16 to 104.81. It was able to trade below it, but wasn't able to hold down there. So clearly, and this was the low of the year until we moved lower last week. So we are having a false break. And, you know, like on the dollar index with its pullback, the question is how high a rally will we get? I mean, we could get a major change in trend here, but at this point, I'm just looking to see how much of a rally we get. And really the rally point to watch is 106.35. That's a broken monthly level of support. Okay, so that I would just be saying, well, I want him 35 pips away. So that's the first level to watch. The buying pressure that we're experiencing at the moment, can those buyers keep the bid? All right. So that would be the level I'm watching at the moment. So we could get there today. So we'll just go through the time frames. Just trading above last week's high at the moment. So we're having a week up. But you can see we're actually, when we came down in the downtrend last month, we sat on top of this level and then broke down through. And once we broke down through, you know, we really weren't able to, when we rallied back up, we weren't able to get there. So really the area to watch is that high point. So that high point set 106.16 up to 106.35. Primary line was what I'm watching, 106.35. Now, at the moment, if we drop down to the 15-minute chart, we are at the figure 106. Now, just because I'm watching the 106.35 level up here, doesn't mean to say price is going to get there. So through the course of the next couple of trading days, I'm going to be watching this whole area from 106 up to 106.35. We may well see 106 tested a number of times, and we may hold there. It's last week's high area. In a perfect world, I would like to see this come up to 106.35. All right, so we're just edging into an area where we could see the sellers take back control. And you know, if we do start to fight 106.35, I'll be looking for a move back down to retest the weekly support area at 105.16 to 104.81. So just watching at the moment. So obviously had quite a parabolic move, started London. Can we get up into that higher area today, tomorrow? That's what we're looking for there. Euro yen similar, looking for the high levels. Now, whether or not we had the Bank of Japan intervention last week, certainly had a big drop. They're rolling all the way back up. So I'm just monitoring, you know, the weekly trend here. We did break through a weekly support level, so that's potentially changed the weekly trend to down. And for 1, 2, 3, 4, 5, 6 to 7 weeks, we've really been holding at this weekly high here at 157.99, which we're getting relatively close to. So I'm looking for this to maybe hold once more in this area. Last week, we failed in this area, 157.99 up to 158.44. Got back up to there on Friday. We haven't quite been there today. So we may only come up to 157.99 or close to. So it's worth just dropping to the 4-hour chart, draw a fib across last week's range. We're just coming up on the current candle or the previous candle into the new candle here to fill that gap that formed yesterday. So now that we're filling this gap, we could well see the market top out. So there's a 79% level there of last week's range. And you're going to see that there's another 79% level. right pretty much where we're touching. 157.88 there. Now it could come up to 157.99, but there's a nice, just filling that gap where we're at. You might be able to find yourself a very tight entry on a 15-minute chart for the opportunity for this to trade back down. Depending on what kind of trader you are, you could be selling here, stop above last week's high. You could be selling here, stop above, I think that's Friday's high. Okay, so to limit your risk. Now it's rather parabolic at the moment. It's not yet showing any form of reversal. You could just start to monitor this for, does it show you a trend line break? So it's in an area where we could expect sellers to come in. We'll just have to wait and see whether that's going to hold up there for moving back down. Lachlan is saying, could the euro yen be falling back into the same range from last month? Well, last month's range, last month's range is here. All right. And we could actually draw this fib if we wanted to, which was from last week's high, from last month's high up there. And doesn't really tell you too much more. We're still in this 79% area. Now we could go higher, but you can see last month we had all these tops along here. That's last month's high. We could come up to all these 4-hour tops at the top if the market wants to. At the moment today, we're still very positive. So, I would just be waiting to see if we can start to see some weakness. But that was a good point. We could come up to all these 4-hour tops up here, test the high area of last month for sure. Certainly couldn't hold the drop of the intervention. I think the key thing to understand though as well is I'm just going to drop to the dollar yen to see where that's trading at the moment. It's still quite a while away from 150. If we get back up to 150, we may well see more intervention. So, we'll have to wait and see what this euro yen does. It's just getting into a very good area where the sellers could come in. So where the price is right now, all the way up to last month's high. Last month's high is at 158.65. So there's about an 80 pip range from where we're at up to the high point up there. This is where I would just start to watch for further failure, because that's where we failed last month, wasn't it? All right. But we might not get as high. We may only come up to the 79% level. You may see a 50-minute candlestick pattern here that you like the look of. So we filled this gap, got formed yesterday. There is still a little bit of an imbalance of some form. I'm not sure whether that's a true candle, because this is the last candle of the day when the spread widens. So I don't know how much of an imbalance there is in there, but theoretically price may want to come back up to this area here. You'll have to monitor, but we're getting very high up there at the moment where sellers can clearly come in. Euro pound now had a nice failure up here. In fact, I might put that fib back in just for the moment. Had the 79% failure, which I highlighted, and we've hit the 127 extension. That looks a bit of an erroneous candle. May have gapped down there on Monday. So at the moment, I would be looking for the next rally. That's the range that's been forming. We have had a week down already because we've broken last week's low. All right. But I would be looking back up for another retracement up here. It's had a first drop, 79% retracement. This is the next drop. Look for the next 79% retracement if price can offer that. Now this 86.58 level, which overlaps with the 62. This is a weekly area of resistance over here that we've moved below. So we might not want to move above that. So there's two levels there to watch intraday for failure. That weekly level at 86.58. So just price from, in actual fact, from that quite erroneous candle, we've actually rallied back up to the 62 and then dropped down. So with that being said, we may see another retest of that level and hold, or we may see a move up to this level. I would much prefer the higher level. Lots of 4-hour tops up here where the market's been collecting its sellers. Because last time we dropped 7 amp retracement, so I would be looking for the same thing. Drop. Can we get a 7 amp retracement? That's at 86.73, that level. Okay. All right, let's get into the pound. Ignatius, you say, how do I get those support and resistance levels with the dots? You'll have to get my chart layouts and templates. Just contact Nathan.bray. Details are in the chat there. All right. So if you get my chart layouts and templates for MT4, you'll be able to these dots on the highs and lows all come in on the charts automatically. All right, pound dollar. So similar looking to the euro. However, we've got this weekly downtrend, but there's just one question in my mind: is this is actually a monthly uptrend? So this pullback here, back to a weekly, is this range here, and we're at the 7 amp level. So are we just having a bounce here, or are we going to put actually a much more significant bottom in here? So for me, with a very negative month last month, negative data coming out from the UK, they didn't put interest rates up. GDP was very poor. Inflation dropped. It's going to be interesting to see if this is a monthly low bottom to move much, much higher, or it's just a very much an interim point on the chart where we have a bit of a rally to move further down. So, if we can't really get back above 123.08 with any conviction, the next level is 124.48. And both of these levels, in my mind, if we fail at either one of these levels, we'll potentially just be putting in a lower top on the weekly chart to move further down. So I do have a bit of a question mark in terms of the monthly trend is clearly up. And this could be an actual bottom on the monthly chart for a much more longer term move. We'll have to wait and see. But we need some more time to come out to see whether or not we are going to see a much higher move or just a short-term rally point. So, we've broken below weekly support. I went through the lesson on structure with you last month. And, broken monthly support could be resistance at 123.08. This was up here, 124.48. That was monthly support from over here. See how we sat on it? We broke below, became resistance. So either one of these levels at the moment could be a strong resistance level intra-month. So at the moment, I'll just be watching. First level is 123.08. 123.08, 12300, the figure. That's the level I'm watching to see whether we're only having a short-term run up or not. So, as I said before, when I got a level I'm watching, I'm just waiting to see if price can get there, first of all. All right. Looks like we're maybe putting a high bottom here on the 15-minute chart. So I'm just watching up here. What will it do up here? We'll be in the red zone of the pivot points. If we can hit 123.08 today, we're pretty much almost at today's projected high, which comes in at 123.14. So we just get that at the top of the chart. So that would be an area that I'll be watching. If you're long, that would be a great area to take profits today. And then this will be a great area to see whether we hold for a reversal. So I'll be watching 23.08 to hold at the moment. If we break above, I'll be watching 123.08 to become support for then a move up to 124.48 monthly resistance. So I don't know whether anybody's got long there. Has anybody got long? back, back here earlier in the day, getting support here at the central pivot point could have been a good time to get long. But we can't go back in time. So now, I'm just focusing on what's going to happen up here. Team, you got long? Well done. All right. So I'm not suggesting you can't be trading upwards on the pound dollar or the euro dollar. I'm just looking at the major levels as we've got these major news announcements coming out for the week. And these could be the critical levels that we see these pairs fail at. Because, we're just having a week up this week after countless weeks down. So this is not a major trend change at the moment. Okay, the day chart trend may just be turning up in the short term, but that can quite quickly turn back to the downside. So pound yen. All right, it's back up to the very high area of last week. There's a 79% level. That's last week's high. And I just want to go to the day chart. So this level has been a clear area of resistance. So we're actually touching it at the moment where we failed last time. 182.67 this day resistance level. That's where we failed. We had 2 days, 1 day rejecting, the second day tagged before dropping. So we actually tagged it back last Friday. Today and then just withdrew on Friday. So, what's going to happen between 182.67 to last week's high, 183.01? That's clearly the resistance area. Clearly, of course, it's moving up at the moment in line with euro dollar, euro yen. And this is moving obviously in line with the pound dollar moving up. So it's just coming into the area where we may get the selling pressure. And it's worth just putting a fib across that range. And 182.67 to 183.01. That's the area I would watch. See if this reverses today. Certainly not, if you were going to get long, you should have gotten long earlier in the day. This isn't not the place to get long because you're back at resistance. So if you're long, you're obviously hoping this resistance area is just going to break and move up and through. However, it's not a place to get long. All right, so we're heading into the red area of the pivot points, into resistance. Just want to go back to I might go back to the 4 hour here so we can see there's 2 4 hour tops there. There was those highs of those 2 daily candles that really rejected this area. See on Friday with the job figures, once we came in, sellers took control to move it down. So do we see just a 4 hour rejection candle in this area today? That may be enough then for you to go, okay, I want to trade down. But at the moment, it's just coming up to test the area. And Slime is saying, with everything that's going on in the world right now, risks increasing the market, US dollar has potential to go higher. Yeah, I mean, of course, the US dollar, if everything got real risky with what's been happening in Israel at the moment, I haven't heard anything to say that the US are going to do anything in regard to what's going on there at the moment. Of course, I have heard that they've lost some US lives, but whether or not they're going to actually get physically involved, I don't know. But the US dollar, of course, is the safe haven. So if we have a serious risk event, the US dollar could get stronger for sure. So, and in severe risk events, generally speaking, the pairs to the yen move down. We have a risk off environment. So some of these yen pairs are getting, exceptionally high up within the range of last week. We could see a false break of this weekly high this week. It's just worth looking at that. If we just break above last week's high with this whole range of movement down, it is worth just seeing where 62% level is. That's at 183.45. So if we just poke through last week's high, you're trading then into a 62 level. So it's not out of the stretch of imagination that we could break above yesterday's high in the short term and then see the market withdraw back below last week's high, because then you're trading to a 62% area of the whole move that we've been forming over the last month or two. So we're definitely maybe moving into a sell area there. I'm just waiting to see, we're just watching to see what it does there. And Edwin, you say one thing you've noticed, we're currently trading at a level that once was consolidation. Yeah, so over here, we had some consolidation before breaking. So we're kind of forming an area of support. We broke down, we came back up. So broken support became resistance here. So, you know, if whoever was buying here, there could be potentially still traders in long positions here. So as price moves back into this area, they of course have the opportunity to get out of their longs by selling. All right, so yeah, an area of consolidation where we clearly break below, could see simply traders that are long want to get out of their positions. So that's going to hold that there too. All right, so we're definitely seeing a shift up, still moving at the moment. I'm sure that pound's still moving up, or at least holding. So dollar yen must be moving up. What's the euro yen doing? All right, it's getting up towards the 158. All right, so of course, a lot of these pairs are just shifting up into sell areas, but not showing any sign of a stop yet. All right, Aussie yen. Now, I'm pretty sure I mentioned this last week, Thursday. Aussie yen, I'm looking for the potential of a head and shoulder pattern forming here. Left shoulder, head, and a right shoulder here. Not got there yet. We've got weekly resistance here at 95.85 and day resistance at 96.06. So just watching to see if price comes into this area. That would be left shoulder, head, right shoulder here. All right, so we're not got there yet. Just worth monitoring between 95.85 and 96.06. 96.09 is your 79% level. All right, I'm actually going to go through how to trade the head and shoulder pattern tomorrow, but the reality is if you have a fib level pretty much opposite your left shoulder, that's your sell level, stop above the high. And then you're targeting support, target 1 and 127 extension as the ultimate target down here. So at the moment, if I just draw it in, in some form, watching for that to come up like so. There's your left shoulder head. Are we going to form a right shoulder there to then trade down and maybe trade down through? Right, so we're about 50 pips away from the area to watch. Now, of course, if you just want to set and forget, you're selling, you'll be looking to sell at 79, which is at 96.09. Stop goes above the head. All right. Onto the Aussie, which I'm looking at similar level, but it's not a similar pattern. It's just a continuation. We've moved down. We're rallying back up, watching the 79% level, 64.54, and you got monthly resistance over here. All right. Simply watching to see if we can come up to that level and fail. So it's a little bit away from there. It's a good, I don't know, 45 pips away at the moment. Simply watching there. If we fail there to then move down to back down towards last week's low as an initial level. Of course, if you short it up here and it starts to move down, this weekly level of support here, 63.64 to 63.57 could still be support. So you need to manage your trade through that area or at the area. But in the short term, we'll look at it on the 4-hour chart. Watching up here, 64.54 to 64.58. All right, getting to New Zealand yen, which I'm sure is getting up to retest that high. All right, so we're actually, pretty much in the sell zone here on the New Zealand yen. If it's going to hold and fail this significant high point, it's had its drop. Is that a rally? Now, ultimately, at the moment, when we look at this chart, if we look at the major swing points, it's actually still in an uptrend. Higher bottom, higher top, another higher bottom. So it would be nicer if it was coming up from a lower bottom, but well, it isn't. So we have to just deal with what we're seeing. Still monitoring the range. If we have a rejection candle today at this level, with that being a higher bottom, I think the safer mode is to wait to see what the day chart does today. Do we see a rejection candle today from retesting that level? Now, you could just be simply watching the 4-hour chart for a reversal. We've actually had a rejection candle already here. Now, if we have another 4-hour rejection candle trading down, back below the 79% level, that may be enough for you to say, okay, I think this is reversing back down. But the only question mark in my mind is that higher bottom on the day chart at the moment. All right, from the weekly chart perspective, it is in an uptrend. It's just, as we go to the higher time frames, if you've been to the monthly chart, I have been to the monthly chart many times with you guys and girls, but we're at monthly resistance up here at very high price points for the New Zealand yen, and with the possibility of intervention. Do you really want to be long at historical high levels on the New Zealand yen? I don't know. I don't. But that day chart most potentially is still a high bottom here. So, or I think for myself personally, I just wait for the day chart just to finish today. And what kind of candle does it present up here? If you want to be more aggressive, then you could look to the 4-hour chart for reversal, or you could look to a real tight entry on the 50-minute chart. There's your current trend line. So we have tagged that level today, early Asia. At the moment, it's not quite able to get back up there. So this could actually be putting in a little. There's the first drop from the level. Holding at the 79% level. So, selling this area, the stop just above the top here would be a very tight entry, which would be limited risk in terms of pips, but would offer, if it traded back down the range, a very large amount of pips, so giving you an exceptionally good risk reward. All right, so depending on how aggressive you want to be, as I said for myself, I think just waiting for the daily candle to show its hand first of all, because the day chart trend is still up. Now, if we go back to the Aussie yen, a little bit different on the Aussie yen here. This is coming up from a lower bottom, whereas the New Zealand yen is coming up from a higher bottom. So, and you'll start to understand why. New Zealand dollar has been a lot more positive than the Aussie dollar over the last week. Now, this is slightly different though to the New Zealand yen structure. This is actually putting a strong move back up, but it's coming up from a lower bottom. So this could actually form some form of double top up here. It is showing you rejection at the moment on the daily candle, and it's rejecting this high here. Pretty sure that's a weekly high. Yes, it is. So, are we unable to really commit above the 60.15 level? All right, again, you could be waiting for this candle to finish today. Does it reject today? And then look tomorrow to trade the reversal. This closing above 16.15 isn't good for the sellers. It's better for the buyers. So if we close below that level today, that would be ideal. All right, and I put this color in here on Thursday to watch that level. So, getting a 4-hour candle closing back below the 79% level That's at 60.10. And even starting to move back below then 60 would be ideal to start to see the sellers coming in. All right, so I'll be watching this area for sure for some weakness over the next day or two. I think like with the New Zealand yen, not even sure, I could be wrong. I thought I heard, I don't think it's showing on the calendar. Somebody might be able to tell me, do they have an election in New Zealand at the moment? I thought I heard they did. Let me just, I could be totally wrong. And I might just search for New Zealand. None. Or I'm not seeing a listing. Does anybody know? All right, Slav, you're saying it's soon. Yeah, I don't know whether it was this week or it's just soon. Doesn't seem to be this week. It's not coming up here. So, but I mean, the positive nature of the New Zealand dollar, which is a bit more positive than the Aussie at the moment, could be because of that election or not, but it's not showing there as a most immediate event. All right. All right, back to chart. So, you know, it's a little bit more bullish than the Aussie dollar, the New Zealand dollar at the moment, but we could be putting it up there a double top. So most definitely worth watching, see if it starts to show its hand on the day chart. Like back to the daily and watching it. If we have a rejection today, breaking today's low tomorrow would be the confirmation of the double top. And then we're going to see a significant trade down through the course of the month. All right, so dollar CAD, I just want to emphasize with the situation in Israel, if we go to look at oil first of all, we were selling off on oil, which was, that's more positive for the dollar CAD. But if we start to once more see some positivity of oil prices moving up, that's going to be negative for the dollar CAD because the Canadian dollar will gain if the oil moves up. So in the short term though, dollar Canadian has been pulling back. And to the monthly chart, I have been saying, and it's a very similar picture on the dollar franc, that the monthly trend position here is lower top, lower bottom, rolling back up. So are we putting in the lower top here on the monthly chart? All right. Now it becomes difficult because the weekly trend's up. So then you're going, well, the monthly is officially down, but the weekly's up. That can become very difficult to trade. Should we trade the weekly trend? Or is the weekly trend going to change its trend? I think at the moment, the weekly trend is up. And in all honesty, the day chart trend is up. So whilst I know that we could be failing on the monthly up there for a lower top, the weekly and the day trends are up. You know, if the day trend was to turn down, that might present a case, and of course, then that the day chart trend is going to change first. Then the weekly trend will catch up, and the monthly trend remains down. This has just been a whole rally all the way back up the range. So at the moment, though, we're not seeing a day chart downtrend. What we are seeing is a pullback. And we did almost gap down today. Must have been a rollover down here to the 62 level. All right, so if we start to, on the 4-hour chart, put in a bit of a base here, it could actually pull back to this area here, 135.43. We see a pull back to old broken resistance. Just back to the day chart. So that's a minor day chart top, but it is a day chart top. So I just want to know where it was based on the 4-hour. Is certainly watching the 62 level at 135.57 down to 135.43. Yeah, this could most definitely be where support comes in for then a continued move up. You know, we've had that very impulsive move up. This is just corrective. So this is the day chart impulsive move up. Now it's pulling back. It's just really pulling back into where you would expect support to come in, potentially, through this week, for maybe a bottom to come in and then to move back up. All right, so bit of a difficult pair at the moment, dollar CAD. You know, we could be putting in a further lower top of the monthly chart, but the weekly trend and day trends remain up at the moment. So, you know, as you were saying, Slav, problems in Israel, potentially, you know, I'd wait to a stronger US dollar. So we'll have to wait and see how things pan out over the week. But, you know, at the moment, that US dollar Canadian is still in an uptrend on the day chart. So I think looking in this area for a pullback too, and then we'll have to watch to see what happens. Dollar franc. All right, it's been moving down and it's very similar. These are my markings from last Thursday. Been very similar to what I was just discussing on dollar Canadian in general terms. We've moved down to a lower bottom. The last 2 months, into the third month this month, you know, whilst the dollar index has moved to a new yearly high, we're not doing that on the dollar franc. We're putting in a lower top to, I think this is February's high. You know, we haven't moved to a fresh high for this year. So we could be putting in a lower top here to continue the move down. Right now, officially we're in an uptrend on the weekly because we traded above that high, but that could just be a complete false break. And that's quite an aggressive 2 weeks of rejection up there, close to the 79% level. So that is, you know, those two candles there are a little bit convincing that maybe we are failing here to trade back down the range. And it is a little bit different to the dollar CAD. This dollar franc has clearly put in a broken low. So we're moving to a lower bottom here at the moment. I think the thing to watch now is this is overextended. So when you have an uptrend here, and you may be monitoring this fib for a pullback, if we break the low, it will often then start to get support at the 127R after breaking the 100% point, for then a rally back up. So we're actually we've obviously been selling down, but we're in the first profit taking area here, 127R to 162R area. This is the profit taking area, and I can see that the support over here. So short-term support could come in here at 90.16. For then the market to rally for a lower top. All right, so I'd be getting rid of that fib at the moment. Just monitoring. Keep dragging the fib down if price keeps moving down, but starting to watch for a rally. All right, the 62, let you know if we can move down a bit more. Let's say we hit supports and then we bounce back up. 62 level will be very close to last month's high. That's not last month's high, but last month's high is this line here. So that resistance level, last month's high in here, I could definitely see this rally back up to here. Want to put in the lower top on the day chart, and then, you know, if the lower top starts forming, then it's open slather to look for a short to, you know, to the downside in line with that monthly trend. So the dollar franc monthly trends look very similar, dollar franc, dollar CAD. Lower time frames are looking a bit different on the dollar franc. It's putting in a change in trend on the day chart, back in line with the monthly trend. So, which is a little bit different to what we're seeing on the euro dollar. So we could be seeing a further decline there in the dollar franc. Well, I'll have to watch and see. There's still a question mark with, you know, if we move back to the weekly chart, when you got all these mix of trends, monthly's down and the weekly's up, this movement down here could just be 1 or 2 weeks down. And then we want to continue the weekly trend, which is up. So it can get very difficult to get your head set which direction you want to trade long term. But don't forget the dominant trend is always the highest time frame trend. the monthly trend here is quite clearly down, but the weekly trend's up, but it's at the 79% level of the monthly range here. So it'd be nice if all trends point the same way, but that's not always the case. All right, so if you like the dollar franc, I think you're probably looking for a rally. Sometimes a rally can come up very high. You know, that could be a left shoulder, that could be a head, and we could get a rally all the way back up here, depending on what the US dollar news does this week. You know, so it comes up. All the way up to 79% level, or all the way back up to here. And then everybody thinks we're going north again to do a final failure. All right, all depending on what central banks do at the moment. We don't have an interest rate decision from the Fed this month. It's not till the 2nd of November, I think. So we could see a very high rally back up. We just need a few more days, and we will need to know what the information is from the US this week on their news items. See whether we can get a change in trend on that pair. All right, let's have a look at gold, which I know is bouncing. And this is what I drew in on Thursday. I said down this support area, just short of weekly support, we may well see a move back up to weekly resistance. So this is quite a minor daily level, which I'd be more inclined to be watching what happens up here at 1884 at the moment. We've also created a gap here that potentially could get filled. So if we just go to a higher time frame, whilst of course this looks quite bullish with the gap, with the events in Israel, seeing that bounce up on the open. Clear trend is down there on the weekly, isn't it? Unless we have a significant something happen in Israel, starts to develop much worse than it is, which is pretty bad at the moment. We may just be rallying back up to 1884. You know, the S&P 500 is rallying. Weekly trend is down on the S&P 500. I've been suggesting on there that we're just potentially going to rally back up into this zone. So on gold, a similar rally could occur back up to this resistance level. There's actually two weekly resistance levels there. So that colored area is the area that was discussed last week. You know, can we move into that area? Now, if you want to trade north at the moment, can the 4-hour uptrend hold itself? You know, you could just be monitoring the 4-hour range. Drop it down to a 15-minute chart. Last week's high is here at 1848. So if this gap's going to hold in the short term, we could well see support coming in on last week's high, 1848. You've got a 79% fib there at 1848. So intraday, you know, that would be a very nice area to look for support if it pulled back within the 4-hour uptrend that we're seeing at the moment. So actual support, you know, yesterday started to come on last month's low. So we're moving back above last month's low to trade up. So could be a question of buying a dip at the moment on gold to trade back up to weekly resistance. So depending on your mode of operation, 4-hour trend is up at the moment. You could be looking for a dip. 79% levels at 1848 with your weekly, last week's high at 1848.91, 1848.20, I think it is there, or 70 for the 79% fib. All right, so let's put it back to the 4-hour chart. You know, watching for a little bit of a pullback. Breaking that 4-hour support low, though, is not going to be good for the rally. All right. Yeah, can we be moving up, then up to 1884? Right, so that's my thoughts on gold. Bit difficult that pair with that gap because gaps often get filled. So whether or not price wants to get up to the resistance level before then moving back down to fill the gap, we'll have to wait and see. And of course, geopolitically, we don't know what's going to happen overnight. So trading some of these instruments when they are quite clearly affected geopolitically. When you're asleep and you can't manage your trades, when things are very unstable, you don't have to trade a particular instrument, or you can just be trading when you can watch, close your trades out before you go to bed, because of course something significant happened in the middle of the night, especially for us in Australia, because Israel's to the left of us. So whilst we're asleep, it's their day. It's always you should always be managing your risk. Should be that in the forefront of your mind. I don't know whether you could hear that bird, but I had a bird screeching past my window. Managing the risk is the first thing, and then looking to trade for profit. So I have to work out, is an instrument too risky to trade at the moment if you can't watch it? Over the weekend, if you were short gold, you wouldn't have been happy there. Of course, you couldn't foresee what happened, but now that we're seeing what's happening, do you want to be in gold over the weekend when something can be happening and then affecting the opening price on Monday? So that's worth considering as you're looking at maybe trading gold and holding positions over the weekend. All right, before we finish up, let's just see what that euro dollar is doing. All right, just stopping to pause. It is above 106 at the moment. I'm just going to be watching to see if it came up to 106.35 at the moment. Pound can't yet get up to 123.08. Pound yen, it is on the 15-minute candle rejecting that 182.67 level. Euro yen, it is on a 15-minute chart turning at the 79% level there. So we're at some key levels there, especially on the pound yen and the euro yen. Are those levels holding for a move down? You have to decide yourself what you like the look of. Giving you some levels to look at. You have to decide, do you like anything that's setting up for yourself to trade around? Okay, so just be aware we have, of course, PPI data and the CPI data coming out over the next, what would it be, 48, right, the next 60 hours. Three events from the US. We've got the FOMC meeting minutes early Thursday, PPI data Wednesday, CPI data Thursday. Okay, so if I don't see a tight entry at a level I'm watching, I'll probably not be doing anything till post CPI. I don't want to be stuck in something that I haven't really seen a profit on yet. I definitely don't want to see something going against me when these news items are, coming towards me. So as I'm saying, just be aware it's a high risk week, both from a US news front and, of course, geopolitically. So just be careful at the moment. Other than that, if you've got the time tomorrow, got the Head and Shoulder webinar coming up at 8 p.m. Sydney time. Lawrence, I'm just looking at your question. Lawrence, so on the euro yen there, you're talking about the trend line. Trend line, it's very difficult to engage with the trend line here at the moment because the trend line is probably very aggressive. Or in fact, if I was drawing a true trend line at the moment, it would be miles away from price action. What you could be doing if you want to be real aggressive, you may have already missed it on a 5-minute chart. You could, of course, wait on the 15-minute chart just for price action to just wait for my data to stream in here on the 5-minute. We are seeing a 5-minute trend change. However you draw your trend line, there's a 5-minute trend line break from a minor low. There's another trend line there. So I've been seeing a little bit of 5-minute breakdown. From a 15-minute chart perspective, what we may see is a closer swing point form here, or we may see 1 or 2 more swing points forming this area here, and then you can obviously then hopefully draw a tighter trend line in to limit your risk and get a trigger to trade. All right. Or you may see a swing point form here, which then gets broken. That could be a trigger to get in as well. So yeah, drawing a trend line there at the moment is not the easiest thing. Might have to look at a different way of getting in. But there's a 5-minute break there. Depends what you want to use as your trigger to tell you, okay, I think it's reversing from up there. I mean, you could just be waiting for the 4 hour. Next 4 hour candle from my clock here doesn't finish for another 3 hours. So if you wait till another 3 hours, so it's 11 o'clock my time, that 4 hour candle hopefully doesn't move too far, and then you could trade the break of the 4 hour candle as an entry, stop above the high, and then you're watching to see if price wants to move down. All right, great. Thanks everybody. Look forward to seeing you next time.